Hello, everyone, and welcome to Powering Experiences, brought to you by Samsung Semiconductor Inc., a show where we sit down with leaders in the field of semiconductor memory, storage, processors, sensors, and everything in between to take a closer look at the intersection of advanced technology and everyday life.
I'm your host, Nick Stoll, and we're here today with David, better known as Dede Goldshmidt. Dede is Vice President, Managing Director, and Head of Samsung Catalyst Fund, which is Samsung Electronics' multi-stage venture capital fund that invests in deep tech infrastructure and data-enabled platforms. Dede's investments span multiple domains, including data center, cloud, artificial intelligence, networking, 5G, automotive, robotics, quantum technologies, and digital health. Previously, Dede was founder and general partner of Valley Venture Capital. Prior to that, he was the managing partner and CEO at Moffett Technology Fund, a publicly traded venture capital firm. At both firms, David was an active investor supporting portfolio companies both financially and operationally. Dede, thank you for taking the time to join us today.
It's great being here today. Thank you very much for the opportunity to talk about some exciting things.
So maybe to get us started, how about you share some of your views on the importance of the startup / venture capital ecosystem as it relates to driving technology and innovation?
That's a great question. First of all, we live in super exciting times, right? Venture and startup activity is at all times high, probably, right? If we just look at venture investments during the first half of 2021, globally, numbers peaked at $300 billion, which is the equivalent of total of 2020, which by itself was a fantastic year, regardless of COVID and so forth. There was a lot of activity. And that is a question, why venture is so important and how does that drive innovation? Of course, this is a topic for itself. We could talk for hours around that. But I think if we can nail down a few aspects of that, startup companies, they're small, nimble, very agile, and most importantly, and sometimes it's a cultural thing of entrepreneurs, the willingness to take risk and to fail, right? If you think of large corporates with mega programs and revenues and all that, sometimes it's more challenging to take the risk. And for a young company, perhaps there's less at risk, right? For a young startup company. What we do see, by the way, is that you can see that startup ecosystems are very strong in certain geographies and not that developed in others. And it also has to do with the cultural, the cultural aspects. Like, for example, Silicon Valley is really where people are interested and willing to take risk. Same in Israel, by the way. Failing in Israel, if you can prove that you learn from that, it's not a career killer, right? So that's one aspect, really. The fact that there are some companies that are willing to take risk and disrupt things, and you need that, right, to drive innovation. The other thing is also, when you look at larger companies, you usually already have the legacy, right? You have the existing infrastructure and things, and to introduce change is more difficult. Startup companies, many come with a clean slate, right? So you start from, clean table, and you can really rebuild things the way they should be. So you have a certain advantage, and that's why startup companies are so important for the, for driving innovation, and they have the ability to that. And sometimes it's more difficult to drive innovation through a very large organization. Of course, by the way, I should say, large corporates are extremely innovative. We just look at Samsung, right? If you go into our foundries, our fabs, super innovative, right? But in certain other domains, smaller, younger, agile companies, may have an advantage.
So, Dede, there are plenty of venture capital firms out there, and there are also a good handful who invest in tech and semiconductors. So, what makes the Samsung Catalyst Fund unique or special in what it does and how it operates?
Yeah. So, as Nick, as you mentioned, right, we're a corporate venture arm of Samsung, right? What perhaps is a bit unique about us, of course, we have a key motivation here to help Samsung develop its business, to help the Samsung business units. In terms of investment approach, the approach that we're trying to take, we really try to find the most disruptive ideas and strong entrepreneurs. We try to really have a dual bar, right? Of course, when we invest in the company, there has to be a Samsung angle. How could that help Samsung in a way, right? But from our point of view, it's also very important to make sure that we invest in high quality teams, very strong entrepreneurial team that is trying to solve a very significant problem where there's a big market need, so a sizable opportunity, and that the barriers to entry are very significant, right? I mean, these should always, we try that these will be companies that could be extremely successful by themselves, right? So even if we don't collaborate with them, we don't help them, they could be very successful. And our strategy is really to see how 1 + 1 could be equal 3, right? How this company can be very successful, bring significant products to market, be impactful, and eventually get to a successful exit. And at the same time, if we work together, we can have a way more significant impact, right? And create, mutual benefit for the startup company, of course, and of course also value for Samsung. So it really means that our bar is somewhat higher, right? So it's not just how it can help Samsung. It's not just, is this a good financial investment? We need to have both of them together. And we try to be successful. Of course, we don't always succeed. But so far, we've had some pretty good exits and good collaborations with companies. So we're trying to bring both financial value and strategic value to Samsung.
When we're talking about investments in venture capital in semiconductors and that space that we operate in as Samsung, can you kind of explain to our audience the difference in the funding cycles between semiconductors and hardware like that versus software, and kind of probably what most people have heard about in the startup world?
Actually, I've had the luxury of investing in both software companies and semiconductor companies, software as a service on one hand and hardware devices on the other hand. And actually, there's significant difference in the kind of effort and the life cycle of the companies. And this translates into different funding needs, right? If you look at, let's take it specifically on the hardware side on semiconductor companies, right? Semis are really front-end loaded, right? If you think about it, you tape out the chip. This can be a very expensive exercise, right? It can be tens of millions of dollars, right? And you need to make sure you do it the right first time, have the right team. So you really need to build your team fairly quickly on, have the right team to get prepared for the tape out and pay for all that. So therefore, you need to raise significant amounts of capital at get-go, right? When you look at software or software as a service as an example, depending, of course, on the vertical, but in many verticals, you can fairly quickly bring an MVP, a minimal viable product. I don't want to say quick and dirty, but you can develop and based on some GUI and things like that, bring a product and test it in the market. And this may require significantly smaller amounts of cash upfront. Of course, at the point that you've achieved product market fit and you know that you have the right product, then you would typically go to massive fundraising to scale the business. But you would do that significant fundraising at a point in time where your product risk and your market risk are significantly lower. They're not zero, of course, right? There's always a risk in that startup environment, but it's different, it's lower. Whereas when you think of the going back to the semiconductor side, even after you have taped out and you've spent perhaps tens of millions of dollars, there are still significant risks out there. And the process of winning customer, may take a long period of time.
So if you're saying that, semiconductors and that kind of thing has a higher risk, what in the eyes of someone who invests in that makes that risk pay out? What makes that risk worth it? And how do you justify that net present value calculation compared to investing in things like software, like you've already said, which has less risk, even though it's not quite zero?
Yeah. I'm tempted to say that it's all about greed, because I'm an investor and so forth. I want to preserve our reputation. And I would say it's really, financial investors, it's all about the potential, right, that they see, right? Of course, we, Samsung Catalyst Fund, we're a strategic investor. And, the strategic angle is very important for us. So things go well beyond just the financial thing and financial motivation. But on the pure VC side, if you look about it, it's really around the potential that you perceive for that.
As you know, the economy can drastically affect your ability to invest in new technologies or innovations. And you've been doing this for a while. So can you walk me through the evolution of investment cycles throughout your career?
Yeah, actually, we've seen since the late 90s, we've seen two cycles, actually. So the 90s, we had the boom, we discussed of telecom and internet and so forth. And then came the dot-com bubble burst, which really cooled off things. And also the telecom market to a certain degree stabilized. And then we had another financial recession in 2008, 2009. And in parallel to all that, developing hardware systems and certainly semiconductor chipsets became way more expensive. As geometry goes smaller and smaller, it becomes way, way more expensive, to tape out and to develop. And as a result of all of that, many of the VCs became more reluctant to invest in these domains, in hardware in general, and certainly into semiconductors. Recently, we see what you call the renaissance, as more VCs are showing willingness to invest in semiconductors. And this is really driven to a certain degree by very successful exits. So, can give an example. One of our good exits, Habana Labs, an AI acceleration chip that the Samsung Catalyst Fund invested into and was eventually acquired for $2 billion about a couple of years ago. And this is really driven, perhaps we can discuss a bit later around, what are the changes that are happening in the landscape? Why are there new opportunities in the semiconductor space? And this is driving booming investment in this domain just because there's significant move. We need to remember, by the end of the day, venture capital goes into domains where there's a very drastic need, where there's disruption. We've seen all the investments into automotive because autonomous driving or driving automation created some sort of disruption and actually turned our cars into having way more electronic content, data centers on wheels and so forth. This kind of disruption creates opportunities for new players who come in and actually, like a magnet, also invites entrepreneurs to come in and try to innovate and disrupt. And similarly, we're seeing the same thing happening now in new domains. And the investors, they see that, right? And that's where the capital is flowing, because where there's a need, you see the entrepreneurs coming, and eventually there are also exit good returns or IPOs or things like that.
So you mentioned that venture capital firms were more willing to invest in semiconductors. So what are kind of the domains for that, and what are the drivers that are making that happen and causing this newer willingness?
So actually, we're seeing quite a few domains that are seeing boost of investments and activities. I would say, it's difficult to say that there's just like one reason for that, but I would say the overarching theme is that data is booming. There's just incredible growth in data. That data has to be processed. There's an opportunity to extract insights out of that data. And we just need to make changes into everything to make that happen, right? And I'll be a bit more specific so it doesn't sound completely vague, but there's a lot of data, and you want to train your AI systems based on these data, so that later on you can also infer out of new data that is coming and have greater insights and so forth. So actually, to be able to process way more data in an efficient way, you need AI acceleration, right? Historically, AI engines were basically software was running on the CPU, and then came the GPU. And today we see a host of new families of AI acceleration chips, dedicated chips that are being designed to accelerate computer vision, recommendation systems, and things like that. The dramatic growth in data is really driving changes in data center architecture, what we call, sort of composable architectures. And what I mean by that, historically, when or even today, when you look at the server would typically have all the functions, right? The compute, the memory, the storage, and all that. And we see a trend where to be more efficient, to better use your memory, to better use your compute, whether it's CPU, GPU, or AI acceleration, to better use your storage. We see a trend of pooling of resources, right? So think of taking a lot of memory, putting it together, taking a lot of compute, putting it together, taking a lot of storage, putting it together, and then orchestrating all that in a way that at each point in time, different workloads, different application would be able to access the resources that they need and then release them to others, right? So today, these things are done on a server level, but actually we see a trend where this is going to happen way more broadly on a data center level. And this, of course, drives need for new semiconductor solutions and types. I mean, if you think of it, a different way to look at it, Moore's law is hitting a wall, and to gain, further improvement, it called for new architectures, not just doing better chips, smaller chips with more gates and things like that. You just need to look at new architectures. Another very important domain is actually networking and connectivity. As the amount of data is growing, the data movement becomes a bottleneck. So perhaps we have AI acceleration chips that can accelerate AI processes, but they need to get the data to be able to do the computation, right? And moving the data becomes the limiting factor. The amount of data that has been generated is just fantastic, right? If you think about it, probably in the past 2 years, half of the data in the world was generated, right? The rate of data generation is just phenomenal. Other things that we should definitely think about is like sensors, right? Again, another domain where Samsung is pretty strong, but in the IoT era, when everything is connected, there's value to add sensors everywhere, right? Because then you can have better predictive maintenance or, things like that. So you put more sensors, you need new modalities of sensors. This, by the way, generates additional data, of course, in turn. But definitely there are opportunities for new sensor modalities, new wavelengths and things like that. And lastly, of course, it's very important, 5G creates opportunity and need for new generation of semiconductor components. The architecture of the capacity of the network is changing dramatically. The number of network elements is going to grow. We're going to have way more base stations. And actually the architecture of the network itself is going to change. The way the computation is being done on 5G network is going to be very different. So all this is creating opportunities for innovation, opportunity for new generation of semiconductor chipsets. Big part of that is being done by large companies like Samsung, of course. And we're a key player there. And of course, we have our peers, but there are opportunities for innovators that want to come and completely disrupt certain segments and come with clean slate, as we said earlier.
And to our listeners, if you want to learn more about Moore's Law and that kind of wall that it might be hitting, go check out our previous episode with Kevin Yee, where we discussed that for, the entire episode. Back to you, Dede. So if we kind of drill down a bit, you talked about a lot of this tech in a domain and kind of top view, but what are some examples of technology that have brought changes to our daily life right now that perhaps, you've had a hand in investing in and perhaps not?
That's a great question, because as investors, of course, we always have the mission of, we're looking for the strategic angle. How can it help Samsung? And we also want to make sure we have very profitable investment. But, you always ask yourself, can we make some impact on the world also, right? And actually, semiconductor is really a fundamental part making everything work, right? Of course, there are lots of innovation things that are not pure semiconductors. You can think about, just give you an example, right? How was our life before Waze, right? Before we had that navigation software, right? But specifically for semiconductor, there are many things that we're using today and completely, I don't want to say, didn't change our life in the way we eat and sleep and things like that, but really change our lifestyle significantly. And we're not even thinking about it. I'll just give you an example, image sensors, right? And Samsung is one of the leaders globally. We turned our smartphones into DSLR cameras, right? You remember once we had to go around with these huge things, it was very difficult to take pictures and all that. And today, you just take out your smartphone from your pocket and you get these gorgeous, photos with our 108 megapixel sensors, right? This is just incredible, right? And it's our smartphone. I'll give you another example. Discom key, right? Historically, we wanted to take files or pictures from one place to the other. We would be burning CDs and DVDs. I don't think anyone remembers even how to do that today, right? We have our discos on keys, which basically relies on flash semiconductor technologies, right? Speaking of driving, we mentioned Waze earlier and so forth. Just think of front-facing camera sensors we have today in the car, right? Mobileye or other vendors, right? And which gives us, help our safety, the way we drive. So, by the way, as we speak of driving safety, right? We just mentioned Mobileye, right? But there are other exciting technologies that could help that, right? I mean, it's all about sensing the road, sensing what's happening around you, and of course, there's the front-facing camera. We also invested in LiDAR companies. For example, we invested into Innoviz, which is a LiDAR company that went public earlier this year. But actually, there are additional modalities of sensing that we expect would be added to the cars in the future. One of them, by the way, is vehicle-to-vehicle communication. We invested, for example, in a company called Autotalks, which basically disrupts by offering semiconductor chipsets that would allow cars to communicate one with the other, send alerts, let the other cars around know where they are, what's their velocity, and things like that. You can think of vehicle-to-vehicle communication as some sort of non-line of sight sensor, right? Because if you're driving and you're arriving at a junction and there's a car coming from your right, but you don't have line of sight to it, then such vehicle-to-vehicle technologies, such as what Autotalks is offering, is something that would be able to give you an early warning, something that the front-facing camera, for example, would not be able to see. Another example, which is perhaps very hidden, many of us, I guess all of us, right? We go to LinkedIn or Facebook, we refresh our feed. Every time we refresh, what's happening behind the scene is that lots of semiconductor chips are working really, really hard, to recommend what kind of post we will be seeing, or even when we do a search on Google, right? What would be the right result? So there are huge AI engines, and they're running on semiconductor chips, processors, GPUs, AI acceleration chips, and so forth. And of course, they call for humongous amounts of memory, right, to be pulled into the memory and then being run over the processors to predict what would be the best post that Nick would like to see, or what is that searching right now. These are the kind of things that technology brought us, right? And of course, there are display technologies. We have these amazing smart TVs, or even the display on our smartphones, and all that. So many things that we're using on a daily basis. And perhaps we don't think much about it unless we work for Samsung or other semiconductor companies. But our daily life really relies and enjoys the output of all these innovations. Many of these innovations are coming from large companies like ourselves, and many of them originates from startup companies that eventually either build a sizable business or are acquired, and then their VCs, investors, or CVCs like ourselves are also happy by the financial returns.
So you mentioned that high bar, and then also, obviously, like you said, you don't always succeed. So what are kind of the processes you go through to find this kind of promising company or startup to invest in?
Very good question. So actually, venture capital, I mean, it's a business. It's like manufacturing, right? Manufacturing, you have the product life cycle. The investment has its own life cycle as well. Everything begins by sourcing. I'll get back to it in a minute. And after sourcing, of course, we have the filtering process, and due diligence is very, very important, right? Because we want to invest into quality companies, and then there's negotiation of the deal, and then signing, execution of the deal. But then work doesn't end. It really starts, right? Because the day after the investment, there's portfolio management, working with the company, trying to open for them doors within the Samsung universe, and generally speaking, helping them through the point of acquisition or IPO or other means of exits. So it's a full life cycle, right? And everything starts and begins. And, we always discuss it also inside our team, right? Sourcing is the highest priority, right? And sourcing is really hard work, right? We have all types of sourcing, right? We have inbounds, right? People reaching out to us. But a big part of the deals that we source, we reach out. We reach out to the ecosystem. We reach out to entrepreneurs that we know. We reach out to founders that we previously invested into their companies. We reach out to other co-investors, other venture funds. We reach out to to CVCs, to other corporates, right? To hear from them. We also do some podcasts from time to time, right? Because it's, each one of these things is a way to let people know the kind of things that we do. And, it's like a call for action. Reach out to the Samsung Catalyst Fund. We want to hear from you. We would like to potentially invest into your amazing new idea. So sourcing is really the beginning of everything. It's not the end of it, right? It's just the beginning, but it's very, very important. And it's very difficult. And by the way, during these times I mentioned earlier, right, $300 billion being deployed into venture in the first half of this year globally, it's a very competitive market. So we also better be very good for people to be willing to take our money. Of course, we have the big advantage as investors that we have behind us, the Samsung brand, which is fantastic. But it's not easy, right? Because it's very competitive, and sometimes things happen very quickly when the market is so competitive. So we need to work really hard, on finding the most interesting and amazing ideas.
And to kind of put a bow on everything here, do you have any final thoughts that you'd like to leave our audience with today regarding the importance of venture capital, or something like the pace of a semiconductor innovation within that?
I think, venture capital is a tiny, small piece of the entire investment world, right? If you think about it, if you have like a pension plan for a 1K or whatever, the vast majority of it will go into liquid stock on NASDAQ or New York Stock Exchange, et cetera, et cetera. A small fraction of that, of your pension or 401k program, or, whoever manages that, would go into private equity and specifically into venture capital. So the way the investors look at that is, this is what, because there's an opportunity to have dramatic gains, it's worth, putting a small amount there, because, you may invest $1 million and have a home run and get back 100 million or 1 billion, fantastic multiple. So that's on the financial side. But, as humanity, right, venture capital really helps drive innovation. So beyond the financial gains that this can generate, this is really a key pillar for driving innovation for the benefits of all of us, right? And of course, there are different domains of investments, and there are also specific verticals of tech for good, but also technologies that are not considered like, the UN Sustainability Development Goals. Many of these technologies, as we previously discussed, help our safety, help us conduct our daily lifestyle, and also help our health. So we're very excited to be part of that, that ecosystem, which has, of course, the mission of helping Samsung in our case, of course, the mission of generating capital gains, but also driving humanity to a better place through technology. And the younger companies into which we invest, we think can bring a lot of contribution to that.
Well, Dede, I want to thank you for the fascinating and insightful discussion and learning more about the Samsung Catalyst Fund. We're really glad that you could join us today.
Well, Nick, I'm the one who should be thanking you. Thank you very much. This is always a lot of fun to discuss these exciting things. Thank you very much for inviting me today.
You've been listening to Powering Experiences by Samsung Semiconductor Inc. Again, I'd like to thank my guest Dede for spending his time with us. This show's executive producer has been Melanie Nelson. Producers include Lisa Warren-Plungy and Danny Pugh, with creative direction from Andrea Karim. Until next time, I'm your host, Nick Stoll. I hope you learned something today.